Everybody, welcome back to the channel. In today's video, we're going to discuss Robinhood and why Hood stock is about to make a huge move tomorrow. We're also going to be looking at the overall markets to get you guys prepared, as always. Now, let's dive into the charts right off the bat. We got the SPY futures. This is the SPY futures. All right, and so far the market is bullish. For those of y'all who watched the video that I released on last Sunday, I told y'all that I was expecting the market to be bullish on the first and second day, and then I warned you guys about a potential rug pull on FOMC day because it was going to be Warsh's first FOMC meeting, right? So the rug pull definitely did happen. The speech that he gave was hawkish, and as you can see, it was on this day right here, where the SPY dropped from 7,600 all the way down to 7,500, maybe 7,480. All right. So a big red day on that Wednesday. And so far, the market has been struggling ever since. It's just been given a bunch of dojis. It's not really going anywhere. This video might be a day too early, but I just felt like making a video because it's been a while. Um, Am I bullish on the market? As of right now, the bulls are in control, but I don't expect them to be in control for much longer. They are in control, like the SPY, the bulls are in control. The Nasdaq, the bulls are in control, right? The moment 30,000 gives out, I think that's when panic is gonna kick in. Like if you look at the futures, there's that gap right here on the left, which I believe is going to get filled. Um, the initial assumption that one can make is that this is the beginning of a double top, right? Because somebody can make that assumption based off of what we're seeing right here. We got top number one, and then the double top right here, serving as resistance, where what we typically see when a double top is in motion and is in progress, and we expect confirmation is a drop like that. Typically, this is what a double top looks like, right? So I am on a lookout for a move like this, and there's going to be, and I have a few reasons why this might happen, all right? But for now, just pay close attention to what goes on in the market. Stay prepared, stay cautious as always, and pick your entries wisely. Okay, pick your entries wisely. Over the weekend, there was a lot of commotion with the Strait of Hormuz and the talk about peace or whatever between the U.S. and Iran, and it's just been going back and forth, but the market hasn't really been going anywhere. But for now, again, like I told y'all, take things day by day. Now let's look at Hood. The reason why I want to share Hood with y'all. Let me go on the. Actually, we're gonna keep it on the daily. Robinhood, right? So I want to share Robinhood with you for one simple reason and one simple reason only. First and foremost, well, multiple reasons, but we have this inverse head and shoulders right here, where we got the left shoulder, we got the head, and then we got the right shoulder that's made up of. I took a trade on this one a lot earlier at the end of May because of this breakout right there. All right. So there was a bullish pennant on there. I was expecting to move to 102 last week on Thursday, or I believe, yeah, this is Wednesday. Yeah, it exceeded expectations and broke all the way up to 110. Now this is the part where the stock gets weak and all of the bears starts to get back in, right? And I say this because it reached a critical level on the chart, and that critical level is right at 110, a line of resistance from January 2nd of 2026, right? Like we had a big push way up here, we tested that level of resistance, and then we got bears from here piling back on again right here, right at resistance. Now the other reason why I want to share this one with y'all is because if you look at the 5 minute, there is something on there. It's not the cleanest. It's not the cleanest structure I've ever seen. It's a little bit imperfect. There's a descending triangle on the chart. All right. The little imperfection is right here. I don't like that, but I will ignore it for the sake of this video. I don't like that. I like it when a candle is above the line. This makes it looks. These little right here, these aren't imperfections. I don't like to see that. But sometimes there's no way to get around it. The situation is bearish. The breakdown happened at 135. We had consolidation followed by a close below 106, right? So far this thing is bearish. I do expect it to fall back down. I do expect it to fall back down below 100. All right, so watch hood for an opening somewhere around here. Maybe it retests 106 where it does some things like this before falling back down, or it just falls back down. Watch hood for that kind of move. It might even go below 100. Let's see where the moving at. Yeah, it might go before. It might go below 100 even, just a little bit. All right, because it left something right here that it got to take care of, right at $94. So this is definitely something to be on the lookout for tomorrow. There could be a big opportunity on there for day traders. All right, now let's do a little update on some of the stocks that I've mentioned previously. The last video was mostly about Microsoft and hood. So we're gonna look at Microsoft first. Microsoft only had one bullish day from 390 all the way up to 397 because of that, which I shared with you guys, right? It only had one good opportunity, and that was over that weekend. So it did what I expected it to do, which was to open higher, right? And even test 400. So that happened. It just couldn't push beyond that. Okay. And if you missed the afternoon, the weekend gap, it provided a smaller opportunity intraday right here for a day trade between 399 to like 401. A little 25 to 30% gain on calls right there, right? So it provided some for anybody who didn't swing this thing over that weekend. Now Google, let's see. Google, I think Google also moved big that day. Let's check this one out. Yeah, so the reason why Google fell today was because of this bearish panic that happened. The bounce, very, very weak. That was meant to be. That was a little sketchy. That kind of movement. The contract didn't really move too much. But yeah, that's why that happened. But on Monday, at least this was the move between the 12 and the 15, right? So it did provide an opportunity as well all the way up to 375 before FOMC happened and dragged this thing down. All right. Yeah. But so far the situation isn't looking great. Max 7 is very, very weak, and they're rolling over as we speak. The gap on the left at 350 got filled 2 weeks ago. Now, the next thing to worry about is the one down here at 305. That's the first thing, and the only thing on my mind is the drop to 105. The volume supports it. The volume supports it. The only thing I don't know is when and how fast we're gonna get down there. That's the only thing I don't know. But I'm pretty certain, or at least maybe I'm being biased. Maybe I do want to see it down there, right? I really do. I want to see it way down here. I do. All right. But also the chart supports it. So we'll see what happens. I'm going to make another video after. Yeah, we got time. I'm going to make another video after MU reports. All of you should be keeping a close eye on MU, right? Because this is how it looks on the daily. We're gonna let it load. Yeah, so this is how it looks on the daily. Quite a beautiful chart. It's very vertical, right? And I told y'all before, the higher a stock goes, the better it looks, right? Short sellers are going to have a field day with this one. So be very patient. I'm not shorting it yet. All right. I am watching it. Will I short it? Most likely. If it's not this one, it's probably gonna be SNDK, or it's gonna be literally any of the other semis, because most of them are look like that. All right. So just keep your eyes on it. And this is the 15-minute time frame. Watch what happens through earnings. Best case scenario, this thing gaps down to like 1100 and then immediately fades out the gates, right? Or it even have a giant gap down by like negative 20%, kind of what AVGO did like 3 weeks ago, right? Something like that could really rock the market, and cause that whole AI bubble sector to fall. Be on the lookout for it. I'm not bullish at these levels. I don't think it's gonna spike to 1500. If it does, then that's an obvious easy short, right? Because it's just gonna pop and then fade. Immediately it's gonna fade, right? Because the chart would just be way too overextended for its own good, and the fall will be imminent. Like if it opens way up here, the only thing that's gonna happen is this. Like immediately the only thing that's gonna happen is that. It's not even gonna, I'm not even gonna think twice about shorting that thing down if I see it pop after earnings. So we'll see what happens. First 2 days it might just go sideways between 1100 and 1200, and then they're gonna report, and hopefully we see a dump, and then the whole market, everything just starts to collapse. Mag 7, all that. All right, so that's my honest thoughts on all of these stocks. One more thing, a little recap. All right, the trade that I took between last week and this week. The trade that I took between last week and this week was, first it was Tesla between the 17. This was like FOMC day until Thursday, right? I took puts on Tesla for the drop all the way down to 388. I get out right here. And then after that, Tesla short, I decided to go long on IWM for the move between 295 and 300. And then I ended up selling that after the morning gap up, and it kept going all the way up to like 299.50. So I sold it like $1 early, but still a solid trade. All right, so that's pretty much the end of the video. Again, I'm not your financial advisor, so do your own research and make your own decisions. Okay. If you disagree with anything that I mentioned in today's video, I will meet you in the comment section and we can argue down there. Don't forget to follow me on social media at Paul Nguma and at Patternology Lab on Instagram and on X. And lastly, don't forget to like and follow for more.